All right, we got a little bit of pressure in the aftermarket on Salesforce earnings, which did disappoint in the outlook, but the cloud story should be a little distinct from the hardware story, as Nvidia will be the highlight this afternoon. George Tsilis joining me alongside Kevin Green as the numbers getting ready to come out. KG, talk to me about the expected move here. I think for options traders, that's kind of the first and foremost thing. As we were looking at the chart earlier, kind of in the middle of this range that's been in between 120 and 140.
Yeah, definitely. The expected move is sitting between, let's say, $10 and $11.50. Kind of just depends on when you're pricing out the options. Now, there is actually a little bit of a call side skew for this print, and rightfully so. That's something that's not outside of the norm when you're kind of looking at Nvidia earnings over the last year and a half or so. But we are right there in that range. So 140 to the upside, you're looking at around 120 to the downside here. And any type of break between those levels, either higher or lower, probably will create actually a pretty decent little squeeze or even a meltdown when it comes to the stock here. Now, we have seen in the past where the market has not been as reactive to the earnings announcement for Nvidia, and so it would not be outside of the norm for us to actually see the stock trading within that range, which once again, those market maker moves is trying to price out at least one standard deviation move. So 66% of the time it's trying to price out that it's going to stay between 140 and 120.
I think that is kind of a fun setup because you could get a sizable move. You could meet that market maker move in either direction and still be within at least what I have on my chart as the major volume areas, 120 and 140. I think the numbers are coming out right now. Nvidia ticking up to about 133 in the aftermarket. So let's look at that chart while I get the numbers for you. By the way, obviously we rallied already on the session, so Nvidia adding on more is a pretty good sign. Data center revenue came in at $35.6 billion versus $34.1. That's the first big red headline there. That's a good thing. Nice beat. The first quarter revenue outlook does exceed the expectations of $42.3 billion at $43 billion, plus or minus 2%. So if they do swing that 2% to the downside, then they would miss a little bit. But it's pretty much solid. Next quarter adjusted gross margin, 70.5 to 71.5. Street was looking closer to 72. So maybe a little bit of disappointment there on the next quarter outlook for gross margins. In terms of, by the way, just revenue on the trailing basis, they did beat 39.3 billion. The street was looking for 38.2. So about $1 billion beat is a perfectly fine number, George. Do you think gross margins missing expectations? That's the only thing I see so far that would be a definitive miss, George. Is that a big deal for them right now, or should they be just concentrating on pushing out as much as possible and worry about margins later?
So I suggest it's the latter. I think that's more important. I think more product is key for NVIDIA. Obviously, the gross margins, which are relatively high for a hardware company at 76 or so percent. These are based on the trailing numbers, and net income margins at 56%. At some point in time, those will break, and I think maybe we're starting to see the breakage, if that's even a correct way of phrasing it, of the profitability of the business. So it comes down to volume, and that's essentially the inflection point investors will have to contend with NVIDIA, because pricing power has been key to generate these enormous rate of changes in top line sales and EPS. So overall we have to contend with that. I think the market is trying to digest that for lack of a better way of expressing it, at least in the after hours. But I think volume is going to be key going forward. The other thing is, at least myself, I'll be looking for more information about their platform as a service and effectively their Omniverse software offerings, because we have to consider that the replacement rate for GPUs will eventually decelerate, and they can certainly make up for that with software.
Yeah, with their maintenance and software services. And KG, what do you think about this number? It'd be one thing maybe if we were, I don't know, 10, 20 bucks higher in NVIDIA, but should this be enough to hold on to the 130?
Yeah, I think it is for now. And then we have the conference call too, right? So everybody and their mother that loves this stock is going to be on that conference call. And it's more likely that it's going to be bullish than bearish for the market. Jensen Huang does a phenomenal job with trying to project out into the future. Look, is there going to be margin concerns? I don't think that should be a question for anybody that's been in a hardware cycle just in general. Right now, you do have to get the volume that is out there. In the Q1 guide, for the most part, I would say probably is in line with expectations. And I think the street was also expecting that as well. A $2 billion beat when it comes to the guidance. That's something that's been in trend for the stock for a very long time. And that's the bar that has been set. We're still trading at around $132 right now. I think the market's going to wait for the conference call. But the numbers overall look good where they need to. And the data center side of the equation actually looks pretty decent. Yes, you had a little bit of weakness in margin for the current quarter. But I think that's also going to be expected as you have more competition and then also their own refresh cycle. Oliver, this is the quickest that they've ever seen when it comes to a refresh cycle in the GPU space. And so it's not out of the norm that they might be cannibalizing their business just a tad bit. And I think that's also probably being reflected in the margins.
Well, nobody's buying gaming chips except for me, I guess. I got updated mine a couple weeks ago, but that source of revenue is declining like 14%, but it's only a couple billion. The almost a doubling of data center revenues to 36 billion from a year ago. It's just hard to spin anything negative fundamentally when there's that type of growth, George, because 93% growth in data center revenues to 35.6 billion. Obviously, that's how we got to this $39 billion business for Nvidia, which is climbing at an 80% rate. And it's not an expensive stock when you consider that growth. That's where it really still seems to argue as being a functioning, healthy pillar for the market. Now, of course, we never know, obviously, but right now, this thing is pinned exactly where it closed. And that seems kind of fair.
I think so. I mean, look, what's happening here, I suggest, is not a bad thing for NVIDIA. Once they come out with new technologies, and this is the case for any hardware or technology company or any production of any sort for that matter, is that the scalability needs to be reset, particularly on the new generation artificial intelligence GPUs. So margin compression should be expected going forward. The other thing is I think the demand elasticity aspect of their products, it's becoming more elastic. There's more substitutes. I'm not saying AMD is there. They're not there yet. Huawei in China. So essentially, pricing power will eventually erode for NVIDIA, but they need to make up for volume, and they may not necessarily have had the volume that the market has demanded over the past 6 quarters just because they can't keep up. So now I suggest that things are turning, meaning that volumes will increase, pricing power will decelerate, margin compression will be something to expect, and that's not a bad thing, but they'll make up for it in higher sales units. And so that pivot point, I think maybe this quarter it may be happening, but in the context of the market itself, as well as the expectations, it's still uncertain. And that's just the way I interpret what's happening in the after hours. I mean, it's an enormous stock, and it's doing pretty much nothing right now as everyone's trying to digest the outcome.
Well, I guess all the options trades betting on a big move are getting stamped out. You kind of whispered to me off air, KG, that you were leaning towards maybe a muted move. I was kind of thinking bigger, but I admittedly kind of have a macro bias to kind of everything, and I feel like the stock market itself is kind of in a period of regime change, which begs for a larger move. NVIDIA doesn't necessarily have to. And I would say that when you have as a good of growth numbers as they are putting up here, and really here's what's important too. Remember that the narrative around DeepSeek was going to be that orders would get delayed or rather canceled, or that people wouldn't need as many chips. I mean, the 80% growth rate that we just got is very much like on the trajectory that was already laid out for them to slow down in terms of sales, because we were doing like 300% a couple quarters ago. So it doesn't really seem like that DeepSeek narrative is terribly bearish. So in terms of the market eyes, I would kind of think that the onus is on bears to try and prove that there's a bear case here, whereas this is still the main bull case for markets, and the numbers look pretty good.
Yeah, so you touched on a couple of things there. So let me try to go through each of them. The first one is seeing any type of reaction from DeepSeek within this report, I think is
too early.
Yeah, way too early.
Okay.
Look, we already know what the caps
outlook
spend is going to be. No, it won't, because the thing is, NVIDIA only guides a quarter ahead. And so when they're locking these orders in, they're locking them out 9 months, 12 months in advance, right? We won't see anything that's residual from DeepSeek or any type of that development probably for another 2 or 3 quarters. A company's not going to make that drastic of a move based on a news report and something that has not been fully substantiated and is somewhat questionable. And so, and the demand is still rising. You still have the mega cap names that are still buying, and no one even talks about the sovereign funds that are trying to get access to this, right? The countries themselves, the Saudi Arabias of the world, that's still kind of in the backlog for NVIDIA right now. So there should have been no expectation that DeepSeek would have shown up here in this quarter, in their guide for next quarter. And when they report next quarter, it shouldn't also show up in their guidance either. It's going to be 2-3 quarters down the road where you're going to see that type of impact. That's going to be one thing. Two, we still have the conference call. So let's go. They don't provide a lot of information when it comes to their earnings release, right? Jensen Huang is not going to talk about a potential product rollout in an earnings release. He'll talk about that on a conference call. And I think that's where you're going to get a lot of the fireworks. And here's the reason why, right? Optimism when it comes to demand. Are you seeing any type of demand falling off? Is Blackwell having some issues when it comes to production? This report and the guidance says no. What are you going to do if you have substantial sanctions or tariffs put on your products going into China in the H20s? That is actually going to be a really big question, because if there is any type of fear that any further China exposure is going to be cut off and potentially scrutiny on the Singapore sales, which some people say that is a little bit questionable, that could actually drag the stock down. So I think there's probably more of a risk to the downside based on the answers from executive leadership in the conference call than probably a rise to the upside. But traditionally, we do see a rise. We got to wait. There's a lot more information that we need.
Totally. And I think that the tone, to your point about the timing of impact of DeepSeek, if anything, that might show up in the tone of the conversation on the outlook, not so much the numbers. So we'll see how Jensen does, but he is usually not one to shy away from very encouraging statements. So I don't think any of this suggests in the earnings that he would be remiss of that usual positive, buoyant attitude. What do you think, George?
I don't think DeepSeek will even be brought up. Maybe some analysts will ask questions about it. I don't think it'll be an issue. Yeah, I don't think it'll be an issue, honestly. I think that everyone should expect that, we are essentially seeing an earnings plateau in terms of the rate of change we saw in the last 6 quarters. That's going to be something you have to get used to. I think it comes down to now is how can they integrate more software and their Omniverse cloud services alongside their technologies. And that's really, I think, going to be key for sustainable top-line sales and earnings going forward. So, I think, valuation still looks very compelling. I just think that you have to be realistic and look for normalized trend growth, not necessarily this parabolic trend growth that we've seen over the last 6 quarters.
Okay. All right. Good stuff. Appreciate the analysis, guys.